Welcome back to the channel, everyone. If you're new here, my name's Kai. I've been investing for around 2 years now, and I've been documenting it all on this YouTube channel, the ups and the downs and everything that I've learned along the way. It's been a while since I've uploaded a video, and honestly, I just felt today is a good day to show the portfolio and show some gains that we've seen over the last recent months, as there has been many changes that have happened not only in the markets but to my own portfolio. I've made some slight changes which I'm excited to share as well. So let's get into it. But before we start, I think a good place to begin is to go over why the market has been rallying all of a sudden. There's been some ups and there's been some downs, but mainly ups, which is great. So if you have been investing, I'm sure your portfolio is likely in the green, assuming that you're based in ETFs, as we're seeing some massive rallies, not only in the S&P 500, but in other ETFs like the SOX ETF, so that's a semiconductor focus ETF, and even funds like the Nasdaq as well. We're seeing some great gains. So we're not seeing only gains happen in the Magnificent Seven. We're seeing a lot more diversification within these stocks, and that's down to a few things. We're starting to see inflation come down a bit, not only just in the UK but in the US as well. And when inflation comes down, interest rates seem to follow as well. So it's almost like the market is pricing this in, forecasting this, as hopefully we get some more interest rate cuts. And if interest rates cuts goes down, then we typically see market prices go up as assets become more valuable. People have more money to spend, businesses have more money to spend as well, which is great for us if you're invested into the market. And for me, I don't know about you, so let me know in the comments below. I just feel that markets are getting a lot more resilient. I see people are not scared to invest. You know, when I have conversations with friends and, you know, family, they're not afraid to invest. When the market pulls back, it's almost like they're happy, like myself, because you can invest a little bit more, dollar cost averaging a little bit more, and markets are just becoming a lot more resilient. And I think that's because people are starting to wake up. I think that holding cash alone is actually an investment in itself. And we've seen over literal decades that if you buy assets, that typically they go up over time, as again, it's pretty generic saying, but the rich get richer and the poorer get poorer. So the only way to build the wealth is to invest and diversify into assets. And we're seeing a lot more resilience in stock markets across the world, which is obviously great for us. We've also had some super strong and projected earnings growth across companies like Nvidia, AMD and Amazon, which I have a position in, which is great. So all of these things, we're starting to see real tangible results, especially with AI. Although there is, like, people are saying that there's a bubble with AI. Again, maybe there is, maybe there isn't, but who knows? I guess it could be a similar story to the dot-com bubble that happened years and years ago now, when I was, you know, probably about 7 years old, which is crazy. So I wasn't even investing then. But again, we could see this bubble pop, but so far there's been conversations around a bubble for a few years now. And every time, you know, news starts putting fear into the space, you know, the market just seems to go up. So it just comes back to the point of resilience, and there's not been a better time to be a investor, a consistent long-term investor, than today. Now, with that being said, let's dive into the portfolio, as I'm again super excited to show you guys what I currently have in the portfolio, what I've changed, my outlook on certain stocks and positions that I might add to, and what I'm currently doing at the moment. So guys, welcome to the portfolio. As we can see on the left hand side, we have hit a huge milestone. We have crossed the 50k mark, which is super great. Again, super thankful and lucky obviously to have done that as well. Now, if you want a video of how I was able to essentially budget and, you know, put myself in a position where I'm able to do this, again, this is down to many different factors. So I can create a video on that, basically the boring stuff that you have to do. So I'm trying to be responsible as a 25-year-old. But yeah, if you want a video on that, again, happy to share how I position myself in that position. But yeah, right off the bat, we do have some cash here as well, which is down to me selling some position, which I'll get onto in a minute. But I want to start on, again, the history of what I have been buying. Now, I've mainly been focusing on buying all world ETFs and S&P 500 ETFs, both Vanguard as well, mainly because I want to beef up those positions. As you know, I don't want to be messing around and buying different stocks and selling different stocks, because it is a bit of a headache. And even psychologically as well, you find yourself checking the apps more. And for me, I want to be as hands off as possible, as I don't want to, I'm not a Warren Buffett. The simpler it is, the better, and the more likely you can stick to it. So although I do like to dabble into stocks here and there, I do want to keep it as simple as possible. So once those positions are built up to the figure that I have in mind, I'll then start to look at other stocks that I am a little bit interested in at the moment. The main change for me that happened is I actually sold my Alibaba stock. Now, this was a stock that I held for probably over a year and a half, and it was a stock that at the time, again, super interested in, and I saw the vision of where this company could go, especially with their focus on AI and cloud. But for me, it got to the point where there was a lot more politics getting involved with it, US and China, and there was so much uncertainty within the stock. I was just bewildered. I didn't know what was going on, and for me, because I didn't have that understanding, I had to put my emotion aside and I just had to sell it. Okay, and with this cash here, again, it can be used for buying ETFs or other stocks. Once I hit a certain figure with my ETF number, that I can start to reinvest. So for me, it wasn't any hard loss. I did make £958 in it, which is great, so I didn't take a loss there. But I felt, for me at the time, it's something I had to get out on, because I could see opportunity elsewhere. And it all links to becoming disciplined enough to take your emotions out of it and seeing something from a strategic angle. If something doesn't align with you, or something is just getting a bit too messy and you can't see where the company is going and there's a lot more uncertainty, then it's probably best to rethink that position and get out of it, because you don't want to hold something because you're attached to it, because you've had it for a long time. You just have to cut it off and then move on. So that is what I've done, and again, I'm happy with my decision. So as we can see from the left hand side, we can see when I started back in 2024 to today's date, and it has been a pretty upward ride, as we can see here, but we have had some major pullbacks that I've experienced during that time, which I saw as opportunities to buy more. And as we can see, the market has rallied on strongly despite all the trade wars and uncertainty. So that's super positive to see, and as a result, the rate of return is around 55%. Now, scrolling down, we can see the holdings at the minute. Now, the overall plan for me is to have my all world be a lot higher than my current position in the S&P 500, just because the all world is a lot more diversified. So that's something I'm looking to do. I have a position in Amazon, which I'm super happy with. I can genuinely see myself keeping Amazon for a long time. It's a product that I use, it's a product that you probably use. And when you think about the real monopoly Amazon does have, not only just on e-commerce, but different industries that they're getting involved in. They're like an octopus. They have so many different businesses and ways to generate revenue, whether it's cloud, whether it's through e-commerce, whether it's through, film and entertainment. They have a company and a footprint in that market. So for me, Amazon is a fantastic company, but it hasn't been, smooth and upsailing. We've had so many different pullbacks, but something that I'm looking to hold. The next individual stock that we have is a small position in Google. Now, I do have another investing account on FreeTrade, which I'll put on the screen here somewhere, and I have more shares within Google and a position in Microsoft as well, which I bought when I was back at uni, which was probably about 3.5 years ago. And I made the classic mistake opening a general investing account opposed to an ISA. So I didn't understand that at the time. So I've just kept those positions there and haven't sold them. Next, we have our position in the emerging market space. Now, I haven't added to this in recent months simply because I have that exposure to the all world ETF. So I don't necessarily need to keep adding to this position here. It's just something nice to have. Again, I could sell it and reinvest it into the all world, but you know, I'm happy to keep it. It's not hurting me at the moment. So yeah, that's in the position there. That's the portfolio update. Again, I've removed that position from Alibaba. There is some positions I'm looking at. I'm looking at Microsoft. I'm looking at BlackBerry potentially. But again, something that I need to do a little bit more research into, but I'm enjoying just keeping the portfolio super simple and keeping up with the markets broadly. So that's it for the video. Again, I'm super interested to hear what you guys are investing in. So if you have bought any positions, sold any positions, let me know why in the comments below, and I will see you on the next video.